Welcome to another episode. Another episode from Frac Can Financial Freedom. We are in the building. We're in the building. Today's May 7th, 2004. Today's my birthday. So it's gonna be a good episode today, right? It's gonna be a good episode. We're gonna actually educate ourselves, right? Let's go. So again, my birthday is, I'm glad I'm still alive. Real shit. Excuse my language. So, real talk. I'm glad I'm alive, man. It's been a journey. I've seen a lot of people leave here. That's not coming back. So I'm glad to see 42. So let's get into the episode. What we're talking about today is, guess what? We are going to talk about interest rates. Yeah. I know, right? We're going to talk about interest rates. All right. Do you even understand how interest rates work? Do you understand? We pay everything. Everything we pay has interest. Okay. Do you know what interest rates, how they work? Yeah, I know I got this number interest rates, or I got this, but a lot of people don't understand what it really is and what it means and how people come up with it and how banks use it. And today it's time to learn. All right. So tune in. Time to feed your brain. Financial talk. Let's go. Interest rates. All right. So first thing we're going to talk about is, what is an interest rate? You know me, right? I mean, I'm going to, when I find out something and I see something and I'm like, wow, I didn't know that. So we're going to really figure out, and we're going to understand. Knowing and understanding is two totally different things. You know what I'm saying? I know. Hold the applause. Knowing and understanding something they're two totally different things. Either you know something or you understand something, and that's a different level of understanding of, really knowing something and how to do something and understanding something. So interest rates. What is an interest rate? You know me. We're going to dive in and we're going to understand what it is. Okay, interest rates. This is what it is. If you look here, it says an interest rate is the cost you are charged for borrowing money, or the payment you receive for depositing money or lending money. So, interest rate, anytime you borrow money, anytime you give out money, or anytime you invest money, it earns interest. You know what I'm saying? And that's what interest rate, that's what it is. That's the technical definition of what it is. Okay? So, how does it work? How it works. How interest rates works. When you're earning interest on your deposit accounts, the bank or the credit union is paying you. This is how you earn interest. In exchange for those interest payments, the financial institution will put those funds to work by lending it to someone else, charging them interest. Okay, so when you give your money in the bank, credit union, or whatever, they just lend it out to somebody else. And they charge them interest, and they get paid for you putting your money in there. And they give you very, very little. Zero. Wait a minute. I think it's 0 point. Okay. Yeah, I screwed that up. 0.01 interest. That's almost nothing. Okay. So that's how people look at it. That's how the whole thing works. Okay, so when you're earning interest, like I said, I'm reading this again, on your deposits, and bank or credit union is paying you exchange for those interest payments. The financial institution, which is the bank, will put those funds to work by lending it to somewhere else. So just know that your bank, when you put your money in a bank, they're giving it to somebody else. Okay, so this is how it's determined. Okay, this is how they come up with it. Interest rates read it with me. Interest rates on many financial products are tied to benchmark interest rates that serve as governors on economic growth and inflation. In simple terms, all right? So the benchmark, kind of like the level of where it's at, the interest rate encourage borrowing and spending accounts that fuels the economy. High bench rates help rein in speculative activity that could fuel inflation. So basically, how they come up with it, is like it's that's how much they charge you. There's like a benchmark, right? There's like a level of how much they charge you and how much they charge everybody else. I mean, it's crazy. For short-term product, look here. For short-term products like savings accounts, CDs, federal fund rates as central roles, the federal fund rate is set by the Federal Reserve, the Fed. Okay, so which they meet 8 times a year. And that's who determines the national interest rate. How much interest rate is going to be on everything, your cars, your houses, the Fed, the Federal Reserve is where it starts, and I guess where it ends. Now, this is how you earn interest, okay? This is right here. How to earn interest. There's a wide range of banking products that can help you earn interest, like checking accounts. No. I mean, that's not going to earn you any interest, trust me. But savings accounts, money market accounts, CDs, and 3-year CDs. So online banks, like check out my other video. That's called high interest yield accounts. High yield. Oh man, I am really I'm really messing that up today. So high yield savings accounts. Check out my last episode. So that's how you earn interest, is in one of these accounts. Like there's an online banks that have high interest accounts where you can put your money and they earn interest very quickly. They pay you high interest. Like I said in my last video, I talk about that. But if you want to earn interest, if you want to put your money somewhere where it grows real quickly, I mean, it's like I said, a savings account. I mean, a savings account, I just wouldn't do it. So savings accounts is just kind of where you keep your money and you want to access it and move it around and stuff like that. But the earn interest, remember, you want to put your money somewhere that has a very, very high interest, like an online bank, like SoFi and stuff like that. So check it out. So last thing, how interest works when you borrow money. When you're borrowing money, all right, the lender gives you the amount of money, and that number, check this out, called the principal. With the money that somebody gives you, if they give you $250,000, that's the principal, okay? It accrues interest, which increases the total amount you pay over the life of the loan. So, for example, if you borrow $200,000, like I said, to buy a house or something like that, and let's say the terms are 4%, you got 4% interest rate. Each month, a portion of your payment goes to the principal, okay? While another chunk is 1 month's interest that accrues for that 4%. For that 4% annual/yearly rate. So over the life of 30 years, okay? So check this out. 30 years, the interest rate makes a big difference in the overall amount that you're going to pay back. So if you got a good interest rate, a 2.5 or a 3.5, that's a dope interest rate. 6%, 7%. I don't know what to say on that one. So your interest rate makes a big difference, okay? So, and last but not least, check this out. We're going to end this right here. Have you guys ever heard of APR and APY? I know you have, like when they're talking about credit cards or interest or anything like that. I didn't know what that meant. I'm being honest, okay? I'm not gonna just kind of
lie about it and act like I didn't know.
So, I didn't know about it. I didn't know what APR or APY meant. So, check this out. APY stands for annualized percentage yield. APY. This number, it reflects the difference that compounding can make in the ability to earn money from your savings. So your APY stands for the yearly percentage year. That's how much you're going to make. That's your APR. Okay, that's how much you're going to make. It's the interest you earn on top of your interest, which we call Guess what that's called? Does anybody know what that's called? That's called compounding interest. Yeah, you got to clap on that one because you can make interest on top of your interest on top of that interest on top of that interest. That's compounding. That's the most powerful thing that we have ever discovered. It's compound interest, in my opinion. Now, there's another one. There's that was APY we talked about first. Next is the APR. Stands for annualized percentage rate. Okay, so the APR is going to be the interest that you pay on the money that you borrow. Right here, it said it reflects the total cost of borrowing by including the interest rate and rate, any fees accrued over the term of the loan. So that is going to be your APR is going to be how much you pay on the money you borrow. Okay, so boom, you know me, I'm in and out. I'm in and out. Short and sweet. Just wanted you to understand interest rates. Okay. Understand what interest rates are and understand how it works, okay? That's the episode. That's the message today. So if it helped you out, subscribe to the page. You got to give me a like so it can help the algorithm, right? So the algorithm can help my videos get out there. Man, if you know me, give me a like and share the video. So that was the episode today. That was the episode, and I want you to understand interest rates, what you pay, and how much you pay for it. Okay? Understand and pay attention to your interest rate when you pay anything. Credit score, things like that. You want a good credit score. That's why we only use credit score. You don't have to live and die by credit score, all right? But we only use that so we can have a good interest rate with what we buy, okay? So you can not have to pay for things twice, and you be like, bro, I didn't pay for this car. You're kind of looking at it like, I didn't pay for this car or this house twice. So check that out. Understand interest rates, all right? Give your boy a like. Subscribe to the channel. If this helped you out, give your boy a like. If this helped you out. So that's the conversation. Educating ourselves on financial issues. A lot of people don't understand what the hell they're doing, what it means, and they're just going, buying. They don't know nothing. I got the money, I'm just going to buy it. Understand what you're doing, okay? Interest rates. Understand interest rates. So that's going to be the episode today, and I'm out. Next episode, we're going to talk about trading. It's time to learn how to trade stocks, and it's time to show you how to make money daily, not your 9 to 5. This is your side income. All right? It's going to be a good episode next time. So, your boy's out. From Frackhand to Financial Freedom, Lil Trey. I'm out.